Hi everybody, this is Lara. I'm going to be giving you some free analysis today of BlackSky technology. Before I get into that, a reminder on next week, I think it's Thursday, I'll be launching my next online course, Buy Low, Sell High. And this is one I'm really excited about. It's a really good course if you want to learn how to develop a plan for your long-term future wealth, like retirement kind of stuff. Okay, BlackSky, a member has asked me to have a look at this. This is what they do, real-time geospatial intelligence, apparently. So, analytics, monitor assets, detect changes. Okay, so it's listed on NASDAQ, and this is what they do. So I'm going to have a look at simply technical analysis. I just wanted to show you what they do. I'm getting my data from Yahoo Finance, so for those of you who want to know how to import data from Yahoo Finance into Wave to do some analysis, this is how you do it. I'm going to historical data and then I click Max, Apply. So, it only goes from December 2019. Weird, you have to scroll down so that it can see all the data before you download it, because sometimes it doesn't all download properly, and then when you download it, you don't get all the data going back. I know that's weird, but that's happened a few times to me. Okay, so it's in my downloads folder. Let's go over to Wave. I'm going to import my data, file, chart, import data, add CSV, find it in the downloads folder. There it is. I'll leave this, adjust for stock splits. They probably haven't had one of those yet. No, I don't want to monitor the input file. Import, symbol is correct. The exchange is NASDAQ. Trading hours, it'll be New York or NASDAQ. Okay. Yes, I need to create it. Just make sure I've got the name right. BlackSky is one word. Technology Inc. I'm not going to bother about sectors. And there we are. Starting on the weekly chart, what I can see from this high to this low, this could be either an impulse or a multiple zigzag. So let's just count the subdivisions. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. That's a corrective number. So let's try a zigzag first. And I think we need to make it probably primary degree. Maybe a short A and an extended C. That should subdivide well. Yep, that's going to be beautiful. So if that downward bear market was a counter trend movement, then the larger trend for this, if this Elliott Wave is right, should be up. And this is a massive bullish engulfing candlestick pattern, absolutely huge. So that's incredibly bullish. We'll get to technicals later. I'm going to put this as intermediate degree, and I'm going to use this as possibly first wave, and then the big question will be, is that second wave over? So this is the weekly chart. I'm going to go down to the daily chart for the detail of intermediate 2. I don't know if this is going to have enough volume for good looking Elliott Wave structures. That first wave looks like a pretty good impulse though. Let's expand that out. Yeah, intermediate 1 looks pretty good. Let's put some labels in there. Nice. Intermediate 2, what could this structure be? This had better be easier than the euro I did the other day. Goodness, that was a nightmare. Figured it out eventually, but did not appreciate. Okay, I'm going to see if maybe A, B, this high, 2.98. Oh no. Or this, 2.92. So that's the high. Oh, okay, that's not going to work. Now C is not going to be a good 5-wave structure, so I think maybe a double zigzag instead of a single zigzag. Double zigzags are really common. Nope, I'm going to put W here. Let's count the subdivisions. 1, 2, 3, 4, 5, 6, 7. That's a corrective number. So let's put a correction in here. No, and I think we've got a short A, sharp B, extended C. Yeah, that looks good. X is going to subdivide okay. Y looks like a 3, doesn't it? Yep, that fits. I can see a 5-wave structure in here. Nice. B, oh, I'm not going to worry about the B wave. Obviously it's over. Well, I should probably do that. Should I? Shouldn't I? Go on. Okay, can we have a leading diagonal in here? A lot of overlapping. Checking lengths. Nope, 3 is too long. What if... no. No, that's not going to work. Oh, no. Oh, what if it was this? No, this. 1.92, 1.92, it's exactly the same. 0.38, 0.28, no, 3 is too long again. What is happening here? Okay, so B is not a single zigzag. Let's try a double zigzag. No. Oh, I don't know if this is going to fit. Maybe this doesn't have enough volume. God, same problem. 3 is too long. I have long wondered, to be honest, if within diagonals the rules might need to be rewritten slightly, just to add that sometimes the third wave can be the longest. That is a third wave tendency, but I'm not prepared to rewrite rules on data like this that's so thin, and I would want to have a few really good examples on bigger markets like an index or a big commodity like gold before I was prepared to rewrite any Elliott Wave rules. I'm not prepared to do that. Oh, okay, I think I can see this could work. Nice, okay. Trend lines probably aren't going to look very good though. Well, better than what we had before. Now this is all going to fit and meet all rules. Yep. Yep, and I can see a nice 5 for C. Okay, and down here for C. No, I think I'll put this here. Excuse me, motive wave, give me my label. Don't do that. What? Weirdos. Yeah, that looks good. Okay, great. So, intermediate 2 could be a complete structure, but the biggest problem with Elliott Wave is it has a tendency to call trend changes early. That's why I rely so very heavily on classic technical analysis. And it's all to do with the degree of labelling. If we move the degree of labelling within part of intermediate 2 down 1 degree, it might not be over. So, for example, if I move the degree of labelling within minute C down 1 degree, this could just be wave 1 from this high to this low, only wave 1 if minute C may be complete, and this could be wave 2. So we could have 1, 2, 3, 4, 5. It could continue lower. There's really not a lot of room for it to move into though, is there? The invalidation point's pretty close by. You can use my invalidation points to calculate your risk. If I was going to buy some of this, and I'm not too sure about this chart yet, I might consider buying a little bit of it. I don't know, but if I was, this is my risk. If we see a new low below $1, then my Elliott Wave analysis is wrong. This is not a first wave up because wave 2 may not move beyond the start of wave 1. So that's the risk to any long position I might choose to take here, and I don't know that I would. I don't like the very bearish look of this chart. Although you would be buying at lows, that's for sure. If I did purchase some of this, I would purchase a pretty small amount. I would say maybe only $100 or $200 for this one for me personally, because I think this is pretty risky. Only money I'm prepared to lose in its entirety. Someone asked me when I did my Elliott Wave Hub event recently, and I was looking at purchasing some stocks. They asked me where my stop would be placed. There's no stops if I'm actually buying the underlying, the actual stock, actually purchasing the stock and holding it through a regular brokerage account. It's not a trading account, it's a brokerage account. That's what I'm doing. I'm actually purchasing the stock. So I don't have a stop. All I have is a price point below which I know my investment is not doing what I expected it to do, and I should cash up and take whatever's left. But my biggest risk management for these very, very high risk little investments, for these little penny stocks like this one, I would only invest a really small amount. Only funds I'm absolutely prepared to lose, like only what I'd spend on a nice dinner out, and if I lose that, whatever, it doesn't matter. I took a punt and I lost. That's fine. If I have enough punts on enough little options that could someday turn out to be great, then one day I'm going to hit a winner. That's the theory. I've got a few winners from my purchases back in 2019 in cryptocurrency so far. They're doing well. So yeah, I'm fine. On the weekly chart, I've got my chart on a semi-log scale so I can see this a little bit more clearly. This is a huge and bullish engulfing candlestick pattern. It engulfs, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 previous weekly candlesticks, and it's got massive push from volume. That is so bullish. I would be a little bit surprised if this one makes new lows after something as bullish as that. It could do. Don't ever say a market can't do something. It will invariably prove you wrong. But on balance of probability, it looks like this low here may be sustained. This is also a hammer candlestick pattern. So on the weekly chart, we've got two bullish reversal patterns, and the important one, the strongest bullish pattern you can see, a bullish engulfing pattern, has good push from volume. Now price is moving slowly lower with declining range. The volume profile, let's take a look at that on the weekly chart. I would say that's bullish, strong bullish push for upward movement, and now weak and declining volume for lower movement. On balance, volume has a tight range on the weekly chart. A break above the yellow resistance line would be a bullish signal. A break below this purple support line would be a bearish signal. Watch that one carefully if you're interested in this. Watch on balance volume, draw your support and resistance lines, look for a signal. Sometimes when you have a nice range like that with almost or horizontal support and resistance for on balance volume, sometimes on balance volume breaks out prior to price, and it gives you a heads up as to what direction price is going to break out. When it does that, beautiful signal. So it's setting up for that. Doesn't mean it will give that signal, but be aware it could give that signal. Do watch that one. ADX is increasing. It's below 15, too low to indicate a downward trend. The downward trend reached very extreme. It's above 45 and above both DX lines. While it was there, RSI reached deeply oversold, exhibits weak bullish divergence with price. Money flow a lot stronger, clear bullish divergence with price. Here's the low, the close here $1.29. This previous point back here, the close $1.75. Nice strong bullish divergence between price and money flow. Stochastics currently neutral. ATR, yep, declining and flattening off as price moves sideways. On the weekly chart alone, I would be very interested in buying some of this. This is a really bullish look. There is a lot of strength off these lows. Price is currently very low and risk is at $1. So yeah, I think I would be pretty interested in this one. I'll have a think about that. Let's look at the daily chart. Very recently, there's a huge bullish engulfing candlestick pattern for the 30th of December, but it lacks support from volume, so a bit suspicious there. Here's the major low. This was the 11th and 12th of May 2022. This is a bullish engulfing candlestick pattern, but when we look at volume, it too lacks support from volume. So on the weekly chart, we've got stronger candlestick patterns with support from volume. On the daily chart, we also have bullish candlestick patterns, but here they lack support from volume. It's not until you get into this enormous bullish candlestick that we see strong volume. The volume profile right now, I would say bullish. You're seeing much more push from volume pushing price higher on upward sessions than you are volume pushing price lower on downward sessions. On balance volume on the daily chart, you could possibly draw some trend lines along here also and wait for a breakout, but I think I'd just rather use the ones that you've got on the weekly chart. Very strong technical significance with those lines on the weekly chart. ADX is increasing. It's telling us there's an upward trend, but it's been fluctuating. And the DX line's a little bit of whipsawing in the last few weeks. So currently an upward trend. That could change, obviously. RSI is neutral. Did we see bullish divergence at that major low? Yes, we did. From this low down, double bullish divergence, very nice. The close for price down here, $2.92. The close for price here, $1.51. And the close for price here, $1.08. Double bullish divergence after RSI reached deeply oversold. And then the strong volume up off those lows. That's bullish. Money flow index, did that? Yep, that also exhibits double bullish divergence at that major low. What's the situation now between RSI and money flow? RSI neutral, money flow neutral, stochastics neutral, and ATR declining and flattening off as prices moving slightly, very slowly lower. I think this could actually be a really good opportunity. I will seriously consider that, and I'll let my membership know in comments to their last posts for the S&P and for Bitcoin if I do intend to buy some of this BlackSky technology. If I do, it'll be a really small investment. I see that there's quite a lot of risk, but it could be a good opportunity to buy relative to very low lows at a really good price. So I might consider a really small investment in that. That's it from me, and this approach of looking for opportunities and finding buying at a low opportunity, holding for years. I intend to, if I buy this, I would hold it for at least 5 years. I like to have only a really long-term outlook on these. This approach is exactly what I'm teaching in my next online course, Buy Low, Sell High. How to identify an opportunity, how to buy at a low, how to hold throughout volatility, how to manage your emotions. The psychology of it's the most important part. And then, very importantly, and most people miss this, how to develop a plan of when to take profit when price is at a high. A lot of people, if they do manage to make a smart investment, it's often due to luck. And then they don't make a sale when prices are high. And then bear markets arrive and all of those potential profits, not actual profits, all those profits vaporize before their eyes, and they're kicking themselves for not selling when prices are high. My online course is going to teach you how to not do that. That's the goal. So that's coming up on Thursday. I'm actually genuinely excited about it. This is the course I wish I had when I was in my 20s and 30s. I'm in my 50s now, and I've had this knowledge for a few years, but not that long. Only since 2014 did I have my CMT designation, and in that last year I learned a lot of this analysis, these techniques, and how to manage these opportunities. So I'm giving you my experience and qualifications in this course, and I really hope if you're new to investing and you see this, that you'd take that opportunity. It could potentially change your life if you really take it on board. I know that sounds a bit hyperbolic, but I genuinely think it's changed my life and it could change yours. So I'm so looking forward to that on Thursday. I'll stop rambling. Thank you so much for your support.